Okay, so lecture 9, we're going to be taking a look at basic market structure. And this, funnily enough, is, it's a very basic concept. It's easy to get your head around, but it's something that a lot of traders, I believe, in their, beginner to intermediate stages, they kind of pass up on, okay? They kind of forget the importance of, looking at your trends, looking at your consolidations, taking stock of what's going on from a basic perspective of just the market structure alone, okay? Because, fairly early on, you're going to start looking at more complicated stuff that seems more appealing, seems like it's going to work better. But sometimes, having a firm understanding of the basics and keeping your analysis rooted in the basics is what is going to work best. And I've definitely found that out over the years, okay? So, market structure is represented by these three different types of trends, okay? So you have the uptrend, and this is where price is going to be making a series of higher highs. So we call this a high high. You'll see this represented on my charts as HH, higher high, and higher lows, okay? So if price continues to make higher highs, higher lows, higher highs, higher lows, and higher highs, we can say that we are definitely in an uptrend. The market is trending upwards, okay? The bulls are favored in this scenario, okay? The bulls are people who are betting on price to go up. Bears are people who are betting on price to go down. So this is your uptrend. Just a series of higher highs and higher lows. Very simple, but again, something that a lot of people, don't take into consideration and will end up taking the wrong side of the trade just because, they're not zooming out and they're not looking at the structure of the asset they're trading, okay? Conversely, we have what we call a downtrend, and this is, as you'd expect, the exact opposite of this. You have a series of lower lows, lower highs, lower lows, lower highs. So, each, push back up fails to break the previous high set, okay? So you come down, you break the low, you come back up, you fail to get back above the high, okay? So if price did come back above the high, you could say this is a trend reversal, but in a downtrend, you have a series of lower highs and lower lows, okay? So the bears are in control, the sellers are winning, the buyers are not, okay? That's all that is. Over here, we have something that a lot of people don't account for. And this is actually where most markets spend 80% of their time, okay? And this is what's known as consolidation. And in a consolidation, you're without a trend, and the price has seemingly found a point on the chart where it feels comfortable. It's found what we call fair value, okay? So this can happen where buyers and sellers are being met at equilibrium. You don't have a trend, and what you end up with is a lot of chop. You'll have, a lower low, then you'll have a lower high, a higher low. It'll just alternate, it'll chop people out. People will often be looking to find trend reversals early on, okay? So they'll say, okay, well, here we go. We've got a new higher high. Possibly we're entering into an uptrend. But markets will spend a lot of time in consolidations. People will buy up here, and the market is not ready to begin a new trend. It'll come back in the consolidation. And same again, people think, okay, we've set a new trend if this comes down slightly lower. If this breaks the low down there, okay, we've had a lower low here. Possibly we're looking to go into a downtrend. And then again, the market's still in consolidation. Eventually it will leave this consolidation to find a new trend. But markets do spend an awful lot of time in consolidation, and you're going to have a mix of higher highs and higher lows and no real structure, which can make it more difficult to trade if you are used to trading the trend, okay? Okay, so now I'm going to take a look at a real life example looking at this Bitcoin chart from the bull run that took place from 2020 to 2021 and, made a lot of people a lot of money at the time, okay? Whether they managed to hold on to that money is a different story. Maybe if they weren't paying attention to market structure, they didn't. But, I'm going to show this as a quick example as it does hold trends fairly nicely. So as we can see, I've marked up where the uptrend is by white letters and the downtrend beginning in the red letters. And starting back in the summer of 2020, Bitcoin began its big bull run that most of you will probably have heard about. And as we see, it was just a series of higher highs, higher lows, extreme rallies where there was very, very little pullbacks. Any higher high was followed by a higher low. You see this one here was also a higher high, higher low, again and again, okay, all the way up. Eventually, we started to lose momentum a bit here. We're still getting high high, high low, high high, high low. On this higher high, the next pullback, and you can see this was it almost looked like it was bound to happen, but the next pullback after this higher high actually printed a lower low. From this point, okay, so from the first lower low coming into the market, what happened? The next leg up did not manage to breach the high over here. So we got a lower high. All of a sudden, this is a shift. This is a monumental shift in the market when price started coming lower. And we can see when we lost this level over here, which was around the $50,000 mark, and I do remember this very clearly, price continued to plummet to the floor, taking out 40% of the value in a matter of days, okay? So this here was the start of the downtrend, and, it was almost prophesized from the point that we got the first lower low in the market. And this goes back to why it is very, very important to keep stock of what's going on with the trend. Because, up here, the emotions are running high. Everyone's feeling great because everyone's made a lot of money. And people tend to overlook simple things like this, okay? And this was a sure sign that there was weakness coming into the market. There was definitely a chance, looking at this chart, that we could still carry on after a bit of consolidation, carry on higher. But this was definitely a sign to de-risk from the markets and that weakness is coming in, okay? And over here, what do you reckon this is, okay? So we've had an uptrend, we've had a downtrend. This over here is what we call consolidation. So as we can see, there was actually a higher high printed over here. So it came up, it broke these highs down here, printed a higher high, and that got rejected. And as I was saying earlier, when we are in times of consolidation, traders will get trapped on either side trying to play it as if we're back in a trend, but that isn't always the case. So it ends this period of consolidation, and then we resumed a bit more of an uptrend, followed by a steep downtrend, which took us down into the bear market. And as we can see now, we're coming into some form of an uptrend again. So that's all there is to it in terms of your basic market structure. As I said, it is basic. It is easy to overlook, especially when you get into the more complicated bits. But my best advice is to always be paying attention to what the trend is and trading with the trend, okay? It's often going to be in your favor to try and carry on trading up with the trend rather than trying to expect where the trend might change before you have any real proof.